Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, co-founders, entrepreneurs, executives, thought leaders, musicians, artists, you name it, in the world of crypto and blockchain globally. And today I have another amazing guest. All my guests are amazing. I'm really looking forward to this interview. Um, I have Sean Mackay, who is the CEO of CoinPayments, coming to us from the Cayman Islands. Sean, welcome.
Hey Jamil, thanks for having me on the show. Great to be here.
You're very welcome. Thank you for being here today. And yeah, so I look forward to this. And let's kick things off. And I usually kick things off with a simple question as they get harder as we go along. But the easy one is what is your background, and is it a logical background for what you're doing now?
Yeah, I mean, there's only so much logic that goes along with a path that started 20 years ago, out of being 18 out of high school, having to make a decision of, what career path you're going to take, what course you're going to take in university, that kind of thing. But I was good in math at high school. So for me, back in 2000, around then, when the internet was just getting started, is logical to go engineering or computer science. And, I didn't really want to sit in front of a computer all day coding, so I chose engineering. Um, and yeah, I mean, it was a great choice. It really taught me how to problem solve, how to find answers to different questions I didn't know, how to research, just how to make things more efficient overall. So it was a great choice, even though I didn't pursue engineering for too long after that, maybe about a year. I think, 1 or 2 years into the program, I knew it wasn't for me. And, it was co-op as well. So you get a little bit of work experience, maybe 5 or 6 different jobs throughout the degree. So you really know what's out there, and you got a full resume when you come out of school. So I highly recommend the co-op program if any of the schools listeners are looking at offer it. And then from there, I told my engineering company I worked with at the time I wanted to be more on the front end, dealing with people, business, building relationships, that kind of thing, where instead of being more on the back end, kind of optimizing things and designing and solving problems. But that never worked out. So, I took a risk and quit engineering and took a commission-only sales job selling printed materials at a local print store. Did that for a while, got a real good bunch of lessons and insights about the other side of things, not the back end, but more kind of the front end customer service sales side of things. And from there, I kind of ran a few businesses myself, some successes, some failures. Had a longer term business in the entertainment space and eventually discovered crypto in 2016. And then CoinPayments, who had an office locally where I was, and met a few of the guys there, and eventually came on board with them. I think I was around number 7 or 8 there, so it's still pretty early days for them. That was back in 2018. So started my crypto voyage venture into crypto around 2016, and then my journey with coin payments in 2018.
Very cool. You said something there. I only usually have a follow-up after the background question, but I do this time. You said I went to grad school at Drexel University. I have a master's of science and finance, but what they have for the undergrads there is a very strong co-op program in the Philadelphia area. What for my young Gen Z listeners, I have some. What are the benefits of the co-op program, so they can consider that when choosing a college?
Yeah, I mean, there's nothing but benefits in my eyes. The one downside, if it's even a downside, is that it probably extends your degree by an extra year. But that's not necessarily that bad. The university years were some of the best years of my life. So, doing an extra year there, definitely not upset about that. But typically how it works is you do 2 terms of school, and then the summer term, you'd normally be off looking for a job. You do a co-op job instead. It's a placement. And it just kind of alternates like that throughout the 5 years. And by the end of it, you have 5 or 6 different job experiences. I mean, you can go back to a previous employer or you can search out a new one. But you have a really good feel of what's out there for your industry, what your degree will, kind of job your degree will get you. And then you also have like a full resume by the time you graduate. You have experience in the industry that you got your degree in, which is also pretty rare. And then obviously those 4 months, you're not working for free, right? They're paying you like a real a real salary, not even like a discounted intern salary or anything like that. So, job experience, yeah, getting paid during the term off of school, and a full resume at the end. I think it's a win-win-win.
I think so too. Sounds good. Okay, so let's talk about coin payments. And I want to find out what it's all about, and especially how your company has withstood the bear market and the 2022 implosions where many companies didn't.
Yeah, it's been a fun past couple of years. I mean, there's never a shortage of drama in the crypto space, that's for sure. But yeah, CoinPayments, we've been around since 2013. So this is not some new fly-by-night crypto company. And we're also a payment gateway and a custodial wallet. So we're not like an exchange that does trading volume or what's Celsius? What would you describe them as? They're more like interest paying custodian, something like that. In any case, we don't do any of that side of the business where typically those clients are retail investors that are speculating on the price or trying to earn interest on holdings or whatnot. We are a payment gateway. So we service merchants and businesses looking to accept payments in cryptocurrency. So we're transacting real world value and we're seeing adoption of crypto firsthand versus the speculative trading volume, which is more people trying to make a profit, people trying to make good trades, that kind of thing. So, I'm very fortunate to be on this side of the coin, so to speak, seeing just how adopted crypto is becoming. But yeah, to get back to your question, how we withstood the bear market, I mean, it's not the first bear market we've seen. 2013, we've seen about three pretty solid ones so far. 2018 being a pretty good one, especially after our business really started to explode in 2017 during that run up, and then surviving the next one. That was the tricky one. This one, not so much. We've kind of been around the block enough times to know how to get through them. It is true that a lot of the businesses we serve there, they tend to hurt a little bit during the bear markets. So their volumes are down, and in return, our revenue is down because we charge a fee on volume. But generally speaking, during the bear markets, you put your heads down, you focus, and for the last year and a half, we've been super focused on the release of a brand new platform to replace our current one. Kind of more secure, safer, cheaper, faster, just way more scalable than what we have now. And we're kind of coming to the end of that. And it seems to be kind of maybe at the right time when the bear market's ending too. So I think everything's kind of converging into a really good spot in the next few months here.
Sounds good. So how does your new platform differ than the one that has existed?
Well, I mean, the main difference is how we treat tokens, Ethereum tokens, Tron tokens, BP20 tokens, because it's just there's like a fundamental difference between Bitcoin and Ethereum in regards to how they treat their transactions. Try to keep it pretty high level here, but Bitcoin, it allows you to put multiple inputs, so multiple addresses into the transaction and have multiple addresses go out of a transaction. So you could essentially take care of, 20, 50, 100 different transactions with just one transaction on the chain. Whereas with Ethereum, you can only put one transaction in or one address in, one input in, and one output. So there's no kind of batching of transactions. So how that translates to a lot of our clients are that, specifically speaking, the platform clients that we work with, where their users make some type of a deposit into the platform, and then use the on-platform balance to do whatever it is, be it trading, be it gambling, be it purchasing things from the marketplace. So they've integrated CoinPayments to allow their users to make deposits in cryptocurrency into the platform. And typically what they do is they'll grab a unique deposit address from us and assign that to one of their users so that user can continually deposit, Bitcoin or stable coins or whatever to that address. But what happens with Bitcoin, it's not a problem, right? Because you have, let's say, 100 different users with deposits spread around 100 different addresses. To consolidate all that into one single withdrawal is pretty easy with Bitcoin because you have the multiple inputs. So you put 100 inputs in and one input out, and you're all set. However, with Ethereum, let's say you're getting a bunch of stablecoin USDC deposits. You got 100 different users that have deposited 100 USDC into 100 different addresses, right? Public math here. What are we at? We're at $10,000, right? So say they want to do a $10,000 withdrawal from those 100 deposits of $100 each. That is 100 different transactions they're going to have to do because that is only one input and one output. So they're spending 100 different transaction fees just to accumulate those 100 deposits into one single withdrawal. So not very efficient at all. And we can take it one step further. If your listeners are familiar with how Ethereum payments work for tokens, you need to have a bit of gas on that address to pay for the withdrawal fee, pay for the transaction fee, but you have to pay some gas to get that gas onto the address as well. So if you're following me, you have a brand new address with 100 deposits, you have to pay basically 200 gas fees just to withdraw the 100 deposits into one single account, right? So not very efficient at all versus Bitcoin. And it's been a problem plaguing all kinds of crypto companies that are doing these types of user deposits. And the best solution there is right now is something called a gas station, and they basically just have a dedicated address that holds gas, and then it distributes it to all the other addresses you want to withdraw from. But again, it's not saving any money; it's just simplifying this user experience. But what we've been able to do is create some smart contracts to handle this type of a situation, and we're gonna be able to save like an uncalculable amount in fees. Because right now, when all this silliness happens, like we're not making any money, the customer's not making any money. I guess all those fees are going into the miners to the blockchain, right? They're all network fees. But anyway, the smart contract solution we have on our new platform is going to save us a ton of money on the network fees. We're going to pass that on to the customer, and the customer is going to end up saving, our customer is going to end up saving tons of money when it comes to consolidating token stablecoin deposits. I hope I was clear enough on that explanation. It's been a problem we've been battling for years.
I love your explanation. I love the concept of gas station. That's great.
Mm-hmm.
Why hasn't more people thought about that? I don't know. You did say the way you explain things, though. I did have, I'm going to change up the questions. One question I had was retail focus, so your institutional focus, so that probably doesn't work. So I'm going to move on to something else that you said, and one is that you talked about going up the past week. This Bitcoin has gone up this past week, right? We're beginning to see that some movement upward. I'm thinking that we're not going to be in a bull market until 6 to 12 months from now, not now. But what do you think are the next top 5 blockchain trends to watch for over this next year, be given that the market is currently looking more promising than it did last week?
Yeah, certainly looking a little more promising. I think there's kind of two driving factors for that. The talk of a Bitcoin ETF, obviously, that's all over the news right now. And then in a few months from now, March, I believe, is the next Bitcoin halving, and that's going to generate a lot more media attention as well. And typically, if you look at the history and past history is not blah blah blah, and it's not investment advice and all of that stuff. But it tends to correlate around this time, a nice little run. However, obviously this time around, the conditions are quite a bit different with high interest rates, a looming recession, just risk off type of mentality for retail investors. So it's hard to say what's going to happen this time, but yeah, so blockchain trends to watch out for. Typically, as I mentioned, during the bear markets, that's when all the developers and the builders, they have their heads down and they're focused on building. They don't have to worry about the price movement headlines in the media so much. And I think DeFi's seen a lot of great work being done to it over the years, and that's going to be a huge. I'm not sure what kind of innovation is going to come out of it, specifically new trends, new ideas, new functionality, but just a bigger usage of DeFi in general, I think is definitely going to be one of the trends. NFTs, that I don't think that it came hard and fast, and then it disappeared pretty quick as well. But I don't think it's over. There's certainly some functionality there, but I guess it just got to a speculative mania state before, and now it'll resume kind of at a more reasonable rate, and they'll find their nice little niche of how they really fit into this whole space. And kind of along those lines with NFTs, also kind of tokenized assets, like real world assets tokenized on the blockchain. I'm not sure how that's going to get solved exactly. I mean, where I always get stuck is, if you have some physical object, like a piece of art, for example, a painting, and you want to tokenize that into, 1,000 different tokens, and then allow people a 1,000th ownership of this piece of art, and it's represented by owning this token in your wallet, and then you can go off, you could trade ownership, you could trade these tokens on, secondary markets and all that stuff. But in the end, somebody needs to hold on to that piece of art, and everyone else that owns the tokens needs to trust that somebody. So again, it's becoming down to a centralized entity that needs to get trusted, when blockchain and crypto is all about decentralization. So how you tokenize real world assets in a decentralized manner, I don't know. But if that solution can be found, I think that's going to be a huge trend. But I don't know what the answer is to that. Any ideas from you?
Any idea? Well, yeah. I think gaming is going to improve efficiency. I think that I would love to see more, growth in the metaverse, more development there. I don't know if that's the next cycle or the following cycle. Uh, we'll see. Because during the Super Bowl commercial a couple of years ago, when the Bengals played, the Rams, I noticed like 12 metaverse commercials. Then last year there was none. I haven't seen that come back, though, but the potential is there.
Yeah, metaverse certainly a big one. But does it need blockchain? That's my question. That should be the first question every time somebody says blockchain. Does it need blockchain? This idea? I don't know. Maybe some
Yeah.
metaverses would be nice to have a decentralized one that runs on a blockchain. But yeah, pros and cons.
hmm Yeah. So we'll see, right? So
Hmm.
I want to find out from you what some of the top cryptocurrencies used for payments are and why.
Sure. We've been around since 2013, as I mentioned before, so we've got a lot of great data about payment payments in crypto, deposits and payments. In the earlier days, I would say up until maybe 2019, it was Bitcoin all the way. Bitcoin was the dominant choice of payment cryptocurrency. It's probably represented maybe 80 to 90% of all of the payment volume that came through our platform was in Bitcoin. I think around 2017, 2018 is kind of when stablecoins became a little more popular. And then they took a little while to develop and kind of mature into the market. But now we see stablecoins as the biggest volume on our platform, representing probably 50 to 60% of the volume, 40% Bitcoin, and then all the other altcoins speckled in the last 5 or 10%. So right now, stablecoins, USDC, USDT, those are the main ones, and then the three different chains that they run on. Well, the main ones at least, the Tron, Binance Smart Chain, and Ethereum. Yeah, so those are kind of the top cryptocurrencies that are used for payments. And it makes sense that things have shifted from Bitcoin being the top one to stablecoins being the top ones. When we were first trying to sell our service, we chose the e-commerce market to get started with, right? And these merchants, they're pretty well serviced from traditional card processors and banking providers, so they don't really need crypto per se. And a lot of them back then didn't even know what it was. So we had to start our whole sales pitch with what is cryptocurrency? Why should you be interested in accepting it, right? So we have to explain to them what crypto is, educate them a bit, and tell them about the benefits of crypto, and then move on to the second part of the selling, which is why you should choose CoinPayments to accept crypto payments. Obviously by that point we built up a good rapport with them, educated them a little, so it's a no-brainer to go with us after that. But still, now we can skip that whole beginning part of what is crypto. And we basically just move straight into why coin payments. But in the earlier days, what I was trying to get to, um, is that these merchants, their biggest pushback was, well, isn't Bitcoin volatile? Why would I want to accept Bitcoin as a payment method and have, I don't know, $1,000 of my sales revenue turn into $500 tomorrow? And it was a valid point. It was crypto was pretty volatile in the earlier days. And from there, there's a couple things they can do. On our platform, for example, they can have their incoming Bitcoin payments automatically converted into a stable coin, so it kind of holds its volatility or holds the value without the volatility, but you still kind of remain in the realm of crypto and that kind of frictionless transacting versus going through the banks. But I mean, that's also another option. You could have your incoming Bitcoin payments converted into fiat, have dollars put in your bank account, euros put in your bank account. That's also an option. So, the biggest pushback was the volatility of Bitcoin, um, accepting payments in Bitcoin and the other cryptos. And that's, I think, why stablecoins have become such a popular deposit and payment method, because people can hold on to stablecoins, without having to worry about the volatility, and then they just use it like they would normally, except without as much of the friction as they would, sending cross-border payments or making a deposit into a casino where, they may not even have a credit card option at that point. So, logically speaking, that's kind of the trends we've seen and why payment volume has shifted mainly from Bitcoin down to stablecoins.
Interesting. There's a couple areas there. Well, first of all, the 5% that's not USDT, USDC, or Bitcoin or stables. The Tron, you said Ethereum, Litecoin.
Yeah, you want to talk about the ones that make up the other parts that aren't Bitcoin and stablecoins? Well, in the earlier days, Doge was a huge one, and I have no idea why. I mean, just the community of Doge holders, Doge. I mean, there's obviously some businesses in there, and they want to accept Doge as a payment method, and then holders have it and they spend it. Anyway, just the amount of payment volume that came in through Doge was surprising, right? And this is before it was always been a meme coin, but before it really became well known and like a really high market cap cryptocurrency. So anyway, that was always a surprising one. And then Litecoin and Bitcoin Cash, those are usually in the top as well. Ethereum, obviously, and Ripple a little bit too.
Got it. And then so you survived the crash. You were collecting
A few of
stables.
them.
Yeah, a few of them. Were you ever collecting algorithmic stables that lost their peg, or you stayed away from that?
Yeah, I mean, we don't really collect. I mean, we did support not the ones that imploded, but we do support DAI, for example, or Psi, I believe it's called now. That's an algorithmic one that's pretty well known maker, and they have the two different coins that work together. Um, but the volumes as far as real world payments go, just not quite as high as the other ones. Um, but yeah, I mean, when we collect our revenue, it's a fee, and we charge our fee in the cryptocurrency that we're processing on behalf of our clients. So we do collect a lot of different kinds of coins. Again, majority payment volume being stable coins, our fees would be the majority in stable coins. Bitcoin is a pretty high one, so we'd collect a lot of fees in Bitcoin, but also we accumulate fees in all these more obscure, unknown altcoins as well. And they're always trading somewhere, and so we can always get it back to one of the major ones.
Got it. Makes sense. Okay, that was for my own. That was for my own knowledge, and so I want to move on to you mentioned a little bit earlier Bitcoin ETF in the U.S. Right?
Mhm.
Get your thoughts on that Bitcoin ETF being necessary in the evolution of the crypto payments industry globally. What do you think about that?
Well, I mean, necessary is a big word. I don't think it's necessary. I think it'll help jumpstart everything a little more. There's always, before each bull market, some kind of catalyst, typically that brings the eyeballs, the attention back to the space. And now more than ever, I think attention is going to be harder to get with everything else going on in the world. Not to mention, the new kind of not hip, but interesting technologies to invest in right now. You know, AI, you got the semi-glutides, you got VR, AR, all this different stuff that can, you know, crypto's almost old news, especially if you're talking in terms of crypto years, which go by, you know, it's very fast. And 10 years makes it seem quite a bit. But yeah, so Bitcoin ETF, I mean, it's something that's been tried for a very long time now, many, many years. But now that some of the largest traditional finance players kind of coming into the space, requesting from the regulators a Bitcoin ETF, I think that's a clear sign that the whole market and industry has matured. It's matured enough to be able to respond to any of the previous pushback and ETF denials and rejections that happened in the past. I mean, these big companies like BlackRock are not going to apply for an ETF without seeing a clear path to having it succeed, right? And seeing a clear demand for it as well. So, you know, generally speaking, on it being necessary for the evolution of crypto payments, no, I don't think so. But for it being a necessity for adoption of crypto as a, you know, maybe not a store of value, that's probably one of the best use cases for it. But certainly an alternative asset class and all of that, just making it more mainstream in general, I think is necessary for that.
Makes sense. The other thing I want to talk about is our politicians sometimes shouldn't be throwing their negativity into the market. You know, there was some articles in the Wall Street Journal and by an article by a politician here that said that if you're following world event that Hamas used Bitcoin to fund their weapons, right, in Israel. And you know, being on the blockchain, everything is transparent, you know, but one of the things that you're in the payment space and illicit financing is always an issue, right? In payments, right? And how do you, as a payment company, curb away illicit financing and curb away their use for terrorism? What have you put in place to be able to make sure that the money you receive or that you receive is safeguarded against those things?
Sure. I'll get into that. Let me just first start by saying I think, you know, the use of crypto in black market terrorist type dealings is just a terrible idea. You know, as you mentioned, everything is on chain. It's all traceable back, and it's not a smart way to do it. You know, I mean, I don't think even if you look at the numbers, I don't know how much true real data there is about this, but if you took like all the terrorist financing for the year and then you made a pie chart, you saw what percent was crypto versus, you know, US dollar bills versus gold and diamonds, arts, whatever they happen to trade with, I think you'll find crypto is very, very tiny, tiny, tiny piece of that pie. But you're right in that we do still need to safeguard against that, regardless of how big a piece of the pie it is. And there's two main ways we do that. There's the onboarding of clients. And so whenever we accept a new client to do business with, we have to put them through our onboarding process, which involves a KYC check, and know your customer. That's typically a passport or driver's license, some kind of ID that we verify, as well as a liveness check where they take a selfie with this ID. And then we also do a proof of address check, which is typically done through a utility bill or tax return, bank statement, anything that has your name and address on it, just to prove where you reside, country of residence. And then if it's a business, because we do service both individuals on the wallet side as well as businesses on the payment gateway side, businesses go through a Know Your Business KYB onboarding flow, which you know, kind of checks their corporation, all the directors that own over 10%, they all have to do KYC and articles of incorporation, all this fun stuff. But basically, all I'm trying to say is that we do all the due diligence of onboarding a client before we start servicing them. That's the first part, onboarding. And then the second part is the transaction monitoring. So all the transactions that they do, we have to monitor those, making sure they didn't send out any crypto to known terrorists, known black market addresses, making sure they didn't receive any from known black market terrorist addresses. You know, and we're a payment gateway and a custodial wallet, so we don't have that type of ability to look into all of this stuff. So we use third-party providers for this. There's a good one for the transaction monitoring that probably has the most data on all the addresses out there, called Chainalysis, and we use them for the transaction monitoring. And just kind of goes to show even more like how hard it is to hide transactions on the blockchain if you're one of these bad actors trying to use crypto for illicit activity.
Got it. Well, it makes sense. Yeah, good idea. Thank you.
Mhm.
Uh, I want to return to our brief discussion about the metaverse, and this is not the metaverse, but um, you wrote a your company wrote a blog recently. I want to find out more information from you about the benefits of crypto payments for the entertainment industry, and for gaming and movies and stuff like that. How do you see crypto payments for entertainment playing out over the next few years?
Yeah, let's pick one of those markets, maybe gaming. I assume you mean online gaming, like online casinos. Is
Yeah.
that right?
Hmm?
Okay. So for those guys, it's a really natural fit for them to accept crypto as a deposit method for their players. Being an online gaming provider, you're automatically categorized as a high risk business in the eyes of traditional banks, card processors. So if they can even get service from a credit card company, as in to allow their players to deposit with credit card, if they can even do that because of their high risk category, they're going to be paying fees upwards of 8, 9, 10% probably to the credit card companies versus e-commerce retailer that's not high risk, they're paying probably more in the 2 to 3% range. So, that's one payment method that's hard to get. We'll essentially just say they're not able to get it. So they have to look for alternatives. Crypto is definitely a great alternative for them, not just for that reason. And you have to ask yourself why would the credit card company charge them that much? I mean, yes, the high risk designation for one, but they get that designation because of something called a chargeback, and that's when a credit card holder uses a credit card to buy something, and then, or maybe they don't, maybe something is purchased using their credit card. Anyway, the card holder will call up the card company and say, hey, I didn't make this purchase, you need to reverse the charges. And then the credit card company, by default, automatically reverses the charges. And then it's up to the business, the merchant, to prove that that was a legitimate charge, right? So that's called a chargeback. And whenever that occurs, businesses have to spend time and money fighting these chargeback cases and bringing them to a resolution. They're getting charged chargeback fees regardless of whether they win the case or not and reverse the fees. And then obviously all the time spent proving their side. That's just for one chargeback, right? I mean, if you think about it, a player that goes onto a casino, they deposit $100 using a credit card, they lose it all within seconds. How many of them do you think are going to call up Visa and say, "Oh, hey, I didn't make that deposit, reverse that charge"? I think that's part of the reason why they get that designation automatically, just being an online gaming company. So anyway, all that aside, and I bring up chargebacks because when you receive a payment in crypto, that is settled in seconds or minutes on the blockchain, right? And there's no chargebacks allowed after that because it's settled. Settled means like, card companies will do a bunch of deposits on the card, and then they'll take maybe 30 days, 2 weeks, 30 days, depending on what relationship you have, before they actually release that money into your bank account. And that at that point it's settled. Whereas with the blockchain, once X number of blocks pass as a industry good practice, that those funds are settled pretty much in seconds or minutes. There's no chargebacks allowed after. It's money in your pocket, right? They can't pull it back out of your pocket. So that's one benefit for sure. And then online casinos, they can typically have players all over the world, and traditional banking card infrastructure, it really matters where the card holder is located, what country the credit card is from versus what country the business is where they're trying to make the payment to. Same with banks, cross border, all that kind of stuff just adds an extra layer of complication onto traditional payments. Whereas with crypto, it's borderless. You're just sending to an address. Doesn't matter what provider, what wallet they're using, what wallet you're using. It's just an address, like sending an email. So borderless nature, no chargebacks, lower fees. Obviously, we don't charge 9-10% like Visa would if they were to get service there. We charge 0.5% on our crypto payments. It's cheaper. It's no chargebacks. It's borderless. It's like very, I don't know. I feel like it's very much meant for each other, that industry, and using crypto as a deposit and payment method. The other industries you mentioned, I think the movie industry, I don't have too much experience there. Um, I don't even know how they do payments. I know the payments are quite big, like in the tens of millions, hundreds of millions. And if they were to move that amount by wire, international wire, or anything like that, I know the fees for that are going to be enormous, right? So you typically, you try to move $100 million across the border, you're gonna be paying, I don't know, what, tens of thousands for the fee, something like that. With crypto, you can move as much as you want for a fixed fee of, if you're doing it in Bitcoin, it's what, $5 maybe at the most. Well, it depends. It spikes. It can spike all the way up to like what, 40 or 80 we've had. Still nothing compared to tens of thousands.
I agree. And you reminded me this one time where I was working back in my corporate America days, where a bunch of us from the office went to the casino, and I won like $5,000 in one night, and I was happy. And my everybody at work was like, "Don't go back." I went back in 5 minutes. The next day, it was all gone.
Yeah, welcome to the casino.
Yeah. But what I do now is when I buy crypto, I put it immediately into the vault. So it's a 48-hour unlock. I make sure I don't have the emotional like I got to think about it for two before I touch it again. You know?
Yeah, it's a great idea, especially if you're in it for the long haul.
Yeah, yeah. So it's worked. so, um, so I want to thank you very much for your time today. I really enjoyed speaking with you. This is great. And I have one last question. It's probably easiest one. It's how can people find out more information about you, about coin payments? How can they become a customer to you guys? And how can they do any of that?
Yeah, you can head on over to coinpayments.com to check out more details on our payment gateway and our custodial wallet. You can see all the different coins we support, learn a bit about crypto. And from there, you can check out our media site, our blog, and all that fun stuff. And we're on all the different social channels as well. So yeah, that's the best way, coinpayments.com.
Awesome. Thank you very much for your time today.
All right, Jamila, great talking to you. Thanks a lot.